This market is on fire. Hey, what's going on, guys? Hopefully you can excuse my silly pun. Welcome back to the channel. My name is Struzyna with the Gunderman Group at Keller Williams Luxury International, and today wanted to give you a quick market update. Not going to be very data heavy, more anecdotal, but you need to know what's going on. The market is hot. It is on fire right now, and you need to know what to be able to do about it, how to interpret it, how to see the cracks, see the ways to still succeed and win, and really just honestly have a good assessment of what you're up against. So if you're here on this channel, it's probably what you're looking for. Make sure you like the video and subscribe to the channel, because I'm going to continue to put out weekly content just like this, and you're not going to want to miss it. So what is going on in the market? Simply put, it is on fire. People who are coming out to buy houses are doing so with a vengeance. There is a ton of cash flowing into our market. There are a ton of people making really aggressive offers. I've had multiple houses where I've written offers and not succeeded, where there were 8, 10, 12, in one case 31 offers on a single property. And it is driving the prices up pretty significantly. There are a handful of examples of properties where it was listed somewhere at a 1.1 price point and it got to 2 million. I had a colleague write a $3.4 million all cash offer that got beat by over maybe $300,000, possibly a whole lot more than that. And so what it's creating is this feeding frenzy, this bidsmanship, brinksmanship, whatever you want to call it, that is just making the prices climb one over the next. The comps are not the thing to use to value property right now. You really have to use those as a starting point and get that competition sense and look at where it could be going. Because what I'm seeing is generally stuff is selling for well in excess of $1,000 a foot. It took us a long time in the East Bay to get to a very consistent $1,000 a foot price point in most of the most desirable neighborhoods, and now we're seeing it in almost every neighborhood here in the East Bay. Properties selling for well in excess of $1,000. Some are even in the $1,400 square foot, which, if you know anything about Bay Area real estate, is like downtown San Francisco or some of the really popular neighborhoods on the peninsula are selling at that level. We've not seen it over here, but now we are. So what does this mean for you? Well, typically speaking, now that we're in early February, this is what always marks the beginning of our hot spring market. It happened a little sooner and a little more furiously than expected, but this is usually when things start to pick up for the season. And from now until about early May, you're going to see probably the most aggressive prices, the most number of bids, the most number of offers, etc. On houses here locally. Now, what does that mean for you if you're not one of these cash heavy buyers who has all cash or 50% down, or is willing to pay $300,000-$400,000 over the comps in order to get a house? Well, there's a couple things. You want to look for some chinks in the armor, if you will, the things that kind of slide in between that don't necessarily resonate. Because even though this market is very intense, people in this market have short attention spans. And so when you see a property that's either listed way too high, given the surrounding comps, maybe isn't presented super well, doesn't have really pretty photos, isn't staged at all, or has wonky staging, or wasn't painted or something, there's a decent chance that it might get passed over by a handful of bidders, as opposed to the ones that are really teed up and beautiful and pretty and renovated 2 years ago and that sort of thing. Those are going to get all the attention right now. So if you can find sort of the diamond in the rough, the couple of properties that maybe don't sell immediately, or they go beyond their offer date for one reason or another, or there's something off about it and it doesn't quite make sense for what you're looking at, dig in on those properties a little bit deeper. I've done a ton of those advice videos. I'll link to some of them up here, but make sure that you are paying attention to what is catching your eye in a negative way, because that's the property that is possibly not getting the attention and maybe the opportunity that you've been looking for. Now, inevitably what happens in this market is because of this frenzied brinksmanship that is happening, sellers get emboldened and they want to list their property higher so that it'll jump even higher. But there's always a breaking point. I can tell you example after example after example over the last 3 or 4 years where somebody listed their property at 1.15 when it should have been listed at 995, and it got nothing, or it got one kind of measly offer on its offer date. It went beyond its offer date, and then my client, we came in on day probably 17 of the listing, saw it, said there's nothing wrong with this. We read the disclosures. It wasn't sliding down the hill. It didn't have a ton of termites, whatever. And we made an offer and it got accepted. And ultimately it got accepted at probably below what it should have sold for. Maybe just a little bit, but still it wasn't quite to the price point that it should have otherwise sold at. So there are going to be those opportunities. There always are. When you look at the long-term averages of all these different houses, and I will link to my Oakland and Alameda What the Money Bought series up here, you can check that out. But when you look at the long-term numbers and the yearly annual averages, it indicates that the data is not totally the outliers. You're not, like, it's not everything isn't selling, 30, 40, 50% over the list price and multiple thousands of dollars a square foot. The data would suggest that those outliers are being pulled down by some other lower performing properties. And those lower performing properties, for one reason or another, are your opportunity. Trust me when I say, if you want to get involved with the really exciting, really fancy, best neighborhood, really well presented, you're going to have to pay right now. But if you're looking for something that's in your wheelhouse, that's affordable, that isn't going to get the crazy amount of competition, look for that property. The weird floor plan, the odd location, the weird listing photos that are taken from a strange angle. Those are the ones that you're going to be able to compete on and win in this moment. Now, eventually, the cash-heavy buyers, the most aggressive buyers, will duke themselves out. They will get tired, or they will have already bought something probably by April or May, and now you become a bigger fish in a not so large pond, so to say. So it may take you a few months during this period of the market to be successful, but just know that this is a moment where you should not get discouraged. If you have been beaten out on multiple offers, you're in good company because a lot of people are in that boat with you. And just wait, look for those opportunities, those cracks in between, and make sure that you are staying patient for your opportunity, because the thing that's going to happen is you're going to get frustrated, you're going to step out of the market, and in that moment, I guarantee you that house is going to come up and someone else is going to get a good deal on it if you totally check out and step out. Hopefully that gave you some reassurance that it's all going to be okay. And since it probably did, give the video a thumbs up and subscribe to the channel, because I'm going to continue to put out content just like this every single week, and you are not going to want to miss it. So without any further ado, I'm signing off. This is Hans Struzyna with the Gunderman Group at Keller Williams Luxury International, signing off for now. See you on the next one.